Okay, welcome back. There's 2 minutes to go for the pre-open session. So we're going to kick off things in a bit from now. SGX is indicating that the market will open slightly higher, 7-8 points or so. Chandan Taparia is derivative analyst. He's joining us right now to take some questions. Chandan, good to have you with us here. Thank you very much. We were pointing out how in index futures, FIIs are now short about 60,000 contracts. How do you read that data point with all that is going on, and how are things set up now?
Good morning, Prasant. Thanks for having me. So first of all, talking about the data setup and the price internal, we have seen comparatively surge in the FI's long short ratio in last 2 months, but now it's hovering near to 40-45% if I talk about the long to short. Even if you see net to net, they turned long, but again turning to bearish side. So the mixed set of data is clearly visible from their front, and that is the reason that market is also missing the absence of follow-up on either side. Even just couple of days back, we have seen gap up, gap down. On upside, it fell to surpass 17,777. On downside, multiple times we are finding support near to 17,150 zone. So I think as of now, we are in a boundary of 17,150 to 17,777 zone. And in between, the immediate support goes to 17,442 marks. So market requires a decisive range breakout, then only the fresh leg of rally. And apart from talking about the market participants, we need to focus on the global market and the volatility. So India VIX is not cooling down. It's near to 20 marks. It is rallied by around 10% in this week and now holding near to 20 zone. So it has to cool down below 18, 17 marks. Then only bulls are going to have the smoother ride. So talking about the Nifty levels, as of now, major trend is positive. So we will continue to be with buy on decline stance even after all the hurdles and the call writing at higher levels. So here I have the view with data of the put call ratio that is slightly inching upwards from the lower levels, and the put writing is visible at the lower strike, and the banking and selective stocks are doing well. So with the support of 17,442, we are looking for an up move towards 17,777, and if that is surpassed, then market is all set to cheer up towards 18,000 to 18,200 marks. And what I believe in this market, the index is turning more volatile than the stock specific approach, and many stocks are doing well with their better advanced decline ratio. So focus more on the stock specific, be light on the index side till it play in this range. So we have 3 trading ideas, and mainly we have positive view on the banking financials, real estate, auto and selective defense name. So first that is buy on Oberoi Realty. This stock has seen the 97% rollover from previous series to this series. Good short covering was seen. This stock is trading at 10 years long. This sector is giving the consolidation breakout of last 10 years, and Oberoi Realty is giving a consolidation breakout of last 10 months. So expecting quick run up in most of the real estate counter, including Oberoi Realty and the DLF. So recommending to buy on the Oberoi Realty with a stop loss of 1015, expecting it to move to us 1080 level. Second trading idea, that is buy on BL. Most of the defensive stocks are doing well and good price setup is visible. 85% rollover seen, good short covering seen in the last series, and now longs are being added. Higher top, higher bottom is clearly visible on the weekly time frame. Stock is trading at lifetime high, so recommending to buy with a stop loss of 312 for target of 336. Last trading ideas, that is from the auto pick. Most of the auto stocks are doing well, including Escorts, TVS Motor, Ashok Leyland, Eicher Motor. So here we are recommending to go long on TVS Motor. This stock is continuously generating the alpha from last 4 months, continuously outperforming the entire auto space. And we have seen huge short covering in the last series and now adding long built up. So recommending to buy on Escorts to continue to cheer the recent momentum. And this stock can gear up a move towards 1065. One can buy with a stop loss of 990 levels.
Okay, thanks a lot for that. Have a great day. Let's discuss the big trends in the auto sales now for the month of August. Commercial vehicle growth rate has come off sharply across the board, whether you look at Tata Motors, Eicher or Ashok Leyland. The two-wheeler segment has also reported a very sharp fall in exports. And the third big trend is that there's a strong revival of passenger vehicle sales in the month of August. So let's discuss this with Basudev Banerjee, who's the analyst at ICICI Securities. Basu, good morning and thanks for joining in. I noticed that CV sales have slowed down quite a bit. I mean, Tata Motors saw just a 6% growth. Eicher CV is up just 4%. And Ashok Leyland, on the back of a low base, has grown 50%. Why do you think that is? Is there a slowdown in demand? Is it just seasonal? And what is the expectation from the CV sector?
See, neither there's a slowdown. Seasonality is there, yes. But if you recall, last year industry was coming out of wave 2, and just after wave 2 ended, the demand suddenly surged up to balance up, and that's why volumes were slightly higher than normal in seasonally weak months. So from that aspect, if I look at Leyland delivering 8500 plus MHCV this month, is quite commendable. So let's not go by the percentage number changes, but let's look at the absolute numbers, and from that perspective, I'll say CV numbers were pretty steady this month. I won't look it from a negative angle that things were on the disappointing side.
Okay. Now, my point more was that the growth rate, which was quite strong in the preceding months, has come off sharply. Perhaps it's because the base effect is also wearing off. The other big trend that I noticed is that two-wheelers have reported a very sharp fall in exports. Not just Bajaj Auto, which had the Nigeria issue. Hero Motor exports are down 50%, TVS Motor exports are down 15%, and TVS has a large contribution there. Do you think that would put a cap on the stock prices?
Yeah, very rightly said. So even Bajaj Auto has been highlighting that exports numbers will be a bit tepid in the coming months because of currency challenges, macro challenges, and a bit of supply chain issues, and destocking activities also has been taking place in the target export markets. So a few months of weak export numbers was pretty much expected, and that is happening. But if you look at both Bajaj and TVS's number, domestic numbers were fantastic. And that resulted in overall volumes to be even much better than expected levels. So 4 lakh of Bajaj and 3.35 of TVS on an absolute basis were far better than last few months' average levels. So yes, weak exports was expected, that happened, but strong domestic balanced that weakness in exports to resulting in decent absolute volume.
Vasudev, good morning. The stunning numbers are being delivered by Royal Enfield, right? What's your view on Eicher now?
So see, 70,000, I won't say is stunning per se. On an absolute basis, if you look at month on month from 55,000, it will look good. But there were various issues why that was subdued at 55,000. But on an absolute basis, if you look at average level volume for Royal Enfield used to be anywhere between 62, 65,000 post the newly launched Hunter 350cc, which is relatively sub 2 lakh on-road model. There was slight pickup in volume, and Hunter got launched sometime, I will say 10th of August. So full month effect is also not reflected in this figure. So ideally, September number for Royal Enfield should be better than 70,000. And if you look at export numbers were below 10,000 units, so which used to be 11, 12,000. So full month effect of Hunter plus exports going back to 12,000 units. So Eicher has the potential to deliver 75 to 80,000 units in September, October. I won't say that 70,000 units was anything extraordinary to justify earnings upgrades.
Vasudev, tractors as a segment has disappointed, isn't it? What's going on there, according to you?
So if you look at the retail numbers of tractors from April to July, there has been quite a lot of divergence with the wholesale numbers. Retail numbers used to be around 11, 12,000 units a week for the industry, where wholesale numbers were far, far higher. So that convergence of wholesale retail through, you can say, destocking activities during final months of monsoon has been taking place in July, August. And typically, if you look at from a wholesale perspective, September, October are very strong months for tractor industry. So year-to-date industry is up some 3%, in line with the industry guidance. So I'm not surprised at the tractor numbers as such.
You're saying that there was a lot of inventory built up, which wholesale, and that channel stuffing, and that basically played out.
Yeah. So April to July, April to June, channel stuffing increased. So the reversal of that happened in July, August, which was desirable.
But this, you said next couple of months are pretty strong, September, October, etc. Will this
seasonally they are the strongest months?
Do you expect retails to be very strong, or do you think? What's your sense?
No, typically wholesales are strong, retails are pretty normal. Retail strong, yes, it will be, you can say November, where the harvest month for summer crops will come up.
I don't think we've got your view on Maruti. How are you approaching that stock now?
See, stock has moved up quite a bit now to 9,000 plus levels. Main driver for the earnings upgrades has been margin outlook improvement, especially with steel, aluminium, now also crude also falling towards $90 a barrel. So those are quite positive drivers for EBITDA margin outlook moving up from 6-8% levels to 12-13% levels by FY24. That's quite a sharp jump in margin levels. Volume-wise, I don't think there has been any major trigger till date. Vitara numbers will start coming in from September, October onwards. New launches further expected towards end of fiscal 23. But Brezza refresh, if you look at, still 165 is nothing extraordinary. They have been doing that kind of number earlier also. So for any major upside to drive led by earnings upgrades, you need positive volume surprises. So till now, I think volumes have been quite in line.
Volumes have been in line. What about M&M as a stock from here out? It's done phenomenally well.
So I will say phenomenally well. Both the stock has done phenomenally well, and in terms of volume, also in the auto segment, they have delivered pretty well. Tractor industry, where industry itself is not doing that well. That's why Mahindra with some 42% market share is also performing in line with industry. But for the stock to deliver further returns from these levels, all eyes should be on the profitability of the auto segment, where volumes now going to cross 30,000 units a month, raw material prices falling, operating leverage improving. So with initial tranche of Scorpio and new launches getting over, price hikes are desirable to see auto segment margin moving up. So when that happens, the next leg of upgrades should start happening. Nor stock has moved up in advance with announcement of 1 lakh order book for Scorpio N or the plans for EV launches. But those things need to get delivered in terms of EBITDA execution.
Right, Basudev, we'll leave it there today. Thanks a lot for joining us. That's a view on autos, clearly been the sector of this year, or at least the last 6 months, because the move started in the last 6 months or so. Now, the pre-open has settled 55 points higher on the Nifty, 121 points higher on the Bank Nifty, and very strong advance to decline at about 7:1. The top gainer in pre-open is Bajaj Finserv. It's been one of the strongest stocks, of course. NTPC, Asian Paints, and IT is making a bit of a comeback today. Mitesh, if we open here, do you trade the index, and what's your 9-10 call?
Anuj, we already have some long positions there, so not adding on to them. But as I said, I think closer to about 17,800, 850 area, we would want to take profits on them and then see. On the individual stock side, I think a buy on Bharat Forge is what I would suggest. That's a buy with a stop at 739 for targets of 775.
Okay, Bharat Forge. Mitesh, thanks for that. Devan, a word on Bajaj Twins, both Finance and Finserv, relentless move ever since the numbers.
Yes, Anuj. I think on the pure fundamental side, if you look at it, I think the business condition-wise, Bajaj Finance, I think, remains in the sweetest spot. I think they are basically having the larger amount of, I think, product to cater to as far as, I think, their subvention pricing mechanism goes along with the manufacturers. So that particular area is, I think, giving them reasonably high amount of business. Along with, I think, the digitization process that they have created, I think their reach has possibly started expanding far better, giving them, I think, relatively higher amount of, I think, customer acquisitions. So that is one aspect. Along with that, I think the cross-selling, which is now happening along the other products, I think, which they have, including insurance, now the brokerage and the lending against shares. I think those kind of products are also giving them a good amount of customer access, and I think the acquisition is happening at a faster pace. So once again, they're using the technology platform to expand the reach. Bajaj Finserv, being the parent company of finance and insurance, I think is definitely, I think, remaining in the forefront. Of course, I think the current move in Finserv, as it appears to me, I think is largely because of the fact that I think the company is going ex-bonus split, I think, going sooner. So that is where I think probably the stock price has probably started jumping. But fundamentals, in a nutshell, I think they remain, I think, extremely strong and convincing for the Bajaj Twins.
All right, Devin, thank you very much. Great speaking with you. Appreciate you joining in with that perspective coming through. Well, let's just, there's 3 minutes to go as far as the market opening is concerned. Let's just look at what the pre-open has left us with. It's a pretty decent start all told. 55 points higher, about 1/3% up, 17,600 is where the index is now trading at. Now, Antique has the sell-side house has initiated coverage on Patanjali. Mangalam is here to tell us more in terms of what they're saying. Mangalam, over to you.
That's correct. So there has been an initiating coverage from Antique with a target price of 17.25 on Patanjali Foods, which was the erstwhile Ruchi Soya. They have a buy rating. A couple of things that the company's pointed out. One, that it is well on its way to be a diversified consumer company, FMCG as well as FMHG, which is health goods as well. The second largest player in the branded edible oil space. But more importantly, the acquisition of Patanjali's food business will accelerate the diversification drive that the company is on. They will not only benefit from strong brand recall that Patanjali has, but also the 5.5 million stores or reach the distribution network that Patanjali itself has. So on the back of all these things, they expect the company to deliver 22% revenue growth, 110 basis points margin improvement, and nearly 49% earnings growth between FY22 and FY24. And as a result of these metrics, they valued the company at 35 times FY24 earnings, a buy rating with a target price of 17.25.
Okay, Mangalam, thanks a lot for that. Mitesh, have you tracked it? The erstwhile Ruchi Soya, now Patanjali?
No, unfortunately, I haven't looked at it.
Okay, any other consumption names? Tata Consumer, Mitesh, it's a stock that you track.
Yes, I think Tata Consumer, Godrej Consumer Products, I think both are on the recommendation list. I think both of these stocks look very good. Tata Consumer, I'm looking at a retest of at least 870, which was the earlier weekly high, and I think eventually a breakout beyond that, which should see a price target of around 960. While similarly for Godrej Consumer,
Sorry, Mitesh, running into market opening, so I'll just have to leave it there. The index is opening with a gain of about 50 points, 17,600 on the Nifty. The Bank Nifty is up about 150 points, 170. Actually, it's it's very volatile. I mean, the changes are happening very fast. This 174, 150. I don't know if this is right reflection. Okay, maybe it is. The Nifty is up 62 points now, and the mid-cap index also opening firm. So it's a good start to trade. NTPC is your top Nifty gainer. It's up 1.5%. Your Bajaj Finserv and Asian Paints also up about 1 to 1.5%. Kotak Mahindra Bank is up about 1%. Adani Ports is doing well. SBI Life is doing well. TCS, Infosys, Wipro, so the IT pack is doing well. The Nifty is now up 75 points actually. It's a good start, you'll have to say. Tata Motors, Power Grid, these are a few other names. Bajaj Finance has been on some kind of steroids. That's doing well. What's not doing well, Maruti Suzuki reacting to its sales numbers, down about 0.5%. Shree Cement getting out of the Nifty is down about 0.5%. Remember, Shree is already off 32% from its highs. But that's it in terms of losers. It's a very strong market now. In fact, 80 points higher now on the Nifty. 17,620 is what we have with NTPC, Eicher Motors, Bajaj Finserv and Kotak Mahindra Bank as some of your top gainers. Prashant, over to you.
I mean, decent start, right? I mean, good start actually. 75 points, so nothing to complain. 17,620. I'm just going to look at the futures and options stocks and see what's happening. So NTPC, you mentioned Bajaj Finserv, both, I mean, there are two names there with the gains of more than 2%. Bharat Electronics is starting 1.6, 1.7 higher. TVS Motor is up 1.5. Federal Bank starts about 1.5 higher. There is Indiabulls Housing Finance, which is starting about 1.5 up. HAL, Hindustan Aeronautics, is another one. BHEL is starting about 1% higher as well. So it's still early days, so we need to give it some more time. Just a quick look at what's down, not very much. HDFC AMC is down 0.4. Maruti is lower by a little bit. What else? NMDC is down about 3/4. So 100 points now on the Nifty. The index is where I think most of the action is. And this is back at 17,650, just like that. So almost 50% of what we lost yesterday being recouped with this opening that we have on our hands. 85, 89, 90 now, so 17,634. Sonia.
Well, yeah, it's a good opening, right? I mean, look at the big movers. Eicher Motors, by the way, after very strong numbers from Royal Enfield, is up about 1%. Tata Motors also has reported a really strong passenger vehicle sales growth this time around. So that stock is up almost 1%. In fact, the Tata Nexon has done exceptionally well this time. It's almost a 240% growth that we've seen, 270% growth that we've seen in the electric vehicle sales for Tata Motors. So that still continues to be the big theme. And in the broader markets, the mid-cap index is now up almost 200 odd points. Plenty of stocks are moving around. Tata Tele, Dhani Services, Dish TV, Paradeep Phosphates, a stock that has done quite well in this month as well, is looking pretty good.
Yeah. I think I just want to spot one stock, which is Piramal Enterprises. I think over the last couple of days, the stock had really fallen way below what analysts were, giving the fair value for the NBFC side of the business. Remember, the pharma business will list separately. Piramal Enterprises, the fair value was anywhere between 1,200 to 1,300. I mean, you can say, okay, 1,100 to 1,300. And over the last 2 days, that's seen quite a bit of decline. So that's had a bit of a breakaway gap. So that's something that you would want to keep on your radar.
There's another one, Best Agro, Anuj. So there was a big investor who has bought in. You don't usually see it at all. I'm only mentioning it because it's coming up with volumes there. So it's down about 5%, but went up 18-19% yesterday. So 1,243 on Best Agro at this point in time. So, I mean, markets after being up 100 are up about 70, so just settling in. Our market master of the day is with us. Mahesh Patil is Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Mahesh, great to have you with us here. Thank you very much for your time. Mahesh, you've been, I mean, the last you were on the program, I think it's been a while. You were a bit cautious overall. How are you looking at the market now at an aggregate level in terms of what we've seen in terms of earnings, what you're hearing from managements that you speak with, and earnings potential overall?
Yeah, so I think clearly last time we were a bit cautious because I think the slowdown what we are witnessing globally, one would have thought that they would have some impact in terms of earnings growth for this fiscal year and going forward. But what we've seen is that the commentary, especially all companies which are focused more on the domestic economy, have been fairly decent. We haven't seen much downgrade to earnings after the first quarter numbers. I mean, earnings growth still remains around in the mid-teens for this fiscal year. And while there have been a few sectors like IT and some of the sectors where we have seen some amount of downgrades, but overall numbers have been fairly good. And the commentary has been, you've seen some improvement in terms of consumption, okay, which was seen a slowdown last fiscal year. So that is seeing signs of improvement over there. Overall, capital good industrial sectors are seeing surprisingly actually a good improvement in their order intake. And a lot of the exporters, one would have thought would have got impacted. But I think the challenge is what we are seeing in the Europe in terms of the energy crisis, production shutdowns. Some of the companies in India are actually seeing there's an opportunity to really supply to those markets. So exports haven't been as bad as one would have expected, when we're seeing global growth slowing down. It's only the global link sector, global cyclicals, which probably have seen a downgrade to earnings, which is metals. And so I think given that, I think the outlook looks fairly good from India perspective. And markets have actually done much better than one would have expected. I think relatively India looks much stronger in terms of a global backdrop where we're seeing across, whether it's US, Europe, China slowing down. And that has probably led to the multiple expansion, what we're seeing relatively for India compared to the other markets.
Got it. By the way, just, the market's getting a bit volatile. It's sort of from the highs taken a bit of a nosedive because of Reliance and HDFC. So, as we discussed in the morning, it's not a market in which a linear view would work. Every day there's some volatility intraday. Mahesh, good morning. So just to carry forward that point, it's been a bit of a bipolar market, right? The domestic stocks have done so well. Autos, FMCG, some banks, while the export-oriented stocks clearly have been taken to cleaners or have been underperforming. Do you think that sort of basic trend would continue from here on as well?
Yeah, so I think looks like because India's, especially in this period, where we see global disruptions, We haven't seen that at the right side, whether it's on the energy side, whether it is on the food prices. We've been able to manage our internal economy pretty well. Inflation also, while it is high, it's not very high. So, and the fact that globally we're seeing commodity prices coming down. India is a net exporter of commodities. So a lot of companies will actually see that benefiting. So ironically, while we are seeing a slowdown globally, marginal slowdown, as long as it's not going to be a major global recession, is actually good for India, because a lot of the companies would see margin expansion, and that's what the market is actually celebrating in the few of the sectors, whether it's in the auto sector, whether it's in the cement sector, where margin improvement would probably mask the slight slowdown in the top line growth. And I think that trend will continue, though I think the valuations there on some of these sectors are now probably above the long-term averages. So multiple re-rating is unlikely. But as long as the outlook remains good, I think over a period of time, you would see these sectors outperform the global cyclicals.
Okay, well, some of these auto stocks continue to hit new highs. So Ashok Leyland is at a fresh 52-week high this morning. The stock is now up almost 35% for the year. And something like a TVS Motor is now up 65% this year. It's crossed the 1,000 rupee mark at a fresh 52-week high as well. Mahesh, good morning. What are your thoughts on how to approach autos particularly? You know, there are some big trends that we're seeing. Passenger vehicle sales are doing exceptionally well, while two-wheeler exports have been under a lot of pressure this month. What is the big takeaway for you from the auto sales, and how do you position yourself as an investor?
Auto sector is still actually, if you look at the two-wheelers, rightly said, it's still way below the pre-COVID levels, peak what it achieved. So there's still a lot of catch-up needs to be done. So even in four-wheelers, we are just nearing that peak what we saw pre-COVID. By and large, I think there was some kind of pent-up demand. Okay, there were supply-side issues which were hindering the auto sector. So those are getting addressed. The chip shortage issue is now getting resolved. So I think production levels are now coming back to normal levels. Demand is fairly decent. And I think overall, looking at the domestic economy, I think rural economy also is able to really do well in the second half, and that's what the indications are. I think the demand from the rural side, especially for two-wheelers, should also pick up going forward. And the margin pressures, I think this will be the last quarter of that, and the correction in the material prices should help over there. So I think overall, I think passenger vehicles still looks, demand looks good. So wait for the festive season. A lot of folks are being bent on the festive season to see how the retail demand actually is trending over there. Commercial vehicles are also doing fine. I think we're seeing a steady growth over there, though. I think, again, for the commercial vehicles to really come to the peak of pre-COVID level, it will take another 2 years is what we think. So we're positive on the four-wheelers and the commercial vehicles. Two-wheelers, I think the EV kind of a transition and the competition coming in, I think that would probably weigh down on the multiples of the two-wheeler sector, because I think the winners in the next 2-3 years would be different from what we are seeing, depending on how they're able to really capitalize on the EV opportunity there.
Got it. That's an interesting point. Now, on IT services, Mahesh, both large caps and mid caps. Mid caps have, of course, done better than large caps. What's your view? Because there's clearly margin pressure. Margins are back to pre-COVID level, but valuations, despite the correction, are still 30 to 40% higher than pre-COVID levels. But is that the new normal? What's your view?
The IT sector, I think it started last 2 quarters because of the margin pressure in terms of the supply side. We've seen salary increases have been very large. But I think that pressure is now kind of peaking out, because overall on the supply side, we are seeing that the pressure which was there in terms of the salary increase, that is kind of now coming down. And availability of manpower is also now much easier. So I think the pressure because of that should kind of ease off. We don't see any further pressure or downgrade to margins going forward. And the key concern in IT sector as we move forward is going to be on the demand side, right? Because we've seen healthy kind of a mid-teens kind of a growth. Whether that will come down and come back to the pre-COVID levels. As of now, the companies are still suggesting that the order outlook is still very good. But I think in the 1 quarter down the line is really when you see, because of this slowdown in the lot of sectors, whether it's the retail side or the industrial side globally, whether that top-line growth will come down, and that will actually drive the performance of the IT stocks going forward from here, because the multiples in the sector are more sensitive to the top-line growth rather than the margins. And we would expect some kind of slowdown in growth in the next year. And to that extent, you could see the P multiples probably have corrected, but I think they will probably still remain over here, because overall the demand for IT from the digital side is still fairly strong. And within the mid-cap sector also, I think there will be clearly classification over there in terms of companies which are more focused towards the digital side, where the demand would still remain fairly strong. But the commodity side, companies on the mid-cap side could see a much larger de-rating going forward.
Okay, the mid-cap IT companies could see a de-rating going forward. I mean, they've already been de-rated quite a bit. I don't know how much more is in store. But by the way, stocks like Eicher Motors are picking up. It's very close to its 52-week high now. 52-week high on Eicher Motors was about 35.10 or so. We're at 34.53, and very strong Royal Enfield sales is boosting that stock up. Mahesh, in general, what is your view on the Nifty earnings for the full year? Have you scaled it up after what you've seen in the quarter gone by? Purely because, you know, consumption has picked up in a big way. Banking and financials are doing well. Your thoughts on whether the Nifty EPS would be scaled up?
So as of now, what we're seeing is that there's not much change to the Nifty earnings for this fiscal year. A few sectors where we've seen downgrades, especially in the metal side or the oil and gas sector, where there have been downgrades to earnings. A couple of sectors where we've seen slight upgrade to earnings on the consumption side, in the auto sector, for example. But I think that neutralizes. Banks have been fairly steady. I think there again, there has been no change in terms of earning forecast. If at all, there has been a slight upgrade to earnings in a few large private banks. So net-net, I think we are still looking at around kind of a mid-teens growth for Nifty earnings in this fiscal year. And I think we'll stick to that. We don't see much change. Though there is some risk going forward, if at all we really see a slowdown globally, I think you will see global earnings growth also kind of declining or getting downgraded. And to that extent, there could be some risk to downgrades, but I think one has to wait and see for the next quarter to see how that pans out.
Mahesh, since we discussed IT, the other areas, manufacturing exports, generally a fair bit of bullishness around it. But if the view is that globally things are slowing down, so one should look beyond this current phase of slowdown, and if some things are changing structurally and we are getting more investments here, more interest in companies globally setting up capacities, that's a positive longer run thing. How would you look at that?
Yeah, I think I would guess so. I think India, after a long time, we've seen manufacturing coming up in a big way. I think all the bottlenecks which were there in terms of infrastructure, we're seeing that improving, the government focus giving incentives. And I think the way the world is changing, I think people trying to really diversify their supply chains from China, that is helping. And in the short term, while there is slowdown in terms of on the global side, but I think we've seen a lot of disruptions. I mean, whether it's in Europe, we've seen gas, energy issues, which is hampering production. So actually, some of the manufacturing companies in India, we've seen actually benefiting out of that. They are able to, a lot of companies there are trying to source from other markets, where disruptions are not there, where supply is steady. And especially on the engineering goods side, we've seen Indian companies trying to capture the opportunity and actually cater to that market. So in effect, actually, Indian companies are gaining market share, whereas overall growth is still kind of weak. And I think that would help in the longer term structurally for Indian companies to be able to get a larger share of the global plan. That could be a longer term trend, I think, which will continue despite the short-term slowdown.
Mahesh, we'll leave it there today. Thanks a lot for joining us. Good talking to you as always. The market, by the way, is turning very volatile. The Bank Nifty, in fact, turned in the red and has now once again seen a bit of a bounce. The Nifty as well, which was at 17,650 comfortably, is now up only about 34 points. So really all over the place. The range sort of is still holding, which is yesterday's high and yesterday's low. So let's see, we tested yesterday's high almost, have retreated Now, do we test yesterday's low or not? I mean, anyone's guess. But of course, a lot of this is global in nature. But the mid-cap side of the market is still doing well. Advanced decline. Sonia is still comfortably in the green at about 2:1, more than 2:1 actually.
Oh, absolutely. And, you know, a lot of stocks. Apollo Hospitals is now up almost 2.5%. Britannia, which has been a strong mover lately, is up about 1% odd. Titan. In fact, let's talk about the FMCG space, the consumption space, because there's a big boost that we're seeing there. Saugata Gupta, who's the MD and CEO of Marico, joins us now for a check on the demand and how FY23 could shape up. Mr. Gupta, thanks a lot for joining in. Can you start by giving us a sense about the demand in the second quarter? You expected it to be in the positive zone as far as volumes are concerned in Q2. But tell us, what is your outlook on margins as well?
See, I think as far as the inflationary situation is concerned, I think the worst is over because I think we had peak inflation in quarter one. So therefore, we believe that things are improving, although crude is still at a high compared to last year, although it has softened. And therefore, we have been able to pass on value to the consumers, and we see that there has been a change in volume, and we expect, obviously, the volumes to be positive this quarter. Now, having said that, I think as far as profitability is concerned and the margins, we see that happening in the sector mostly in the second half, because in this quarter, although there has been a decrease in a lot of input costs, as you know, all of us hold stuff. We also pass on the benefit immediately to the consumer in certain ways, in certain channels. Therefore, that impact on margins in the sector will start happening definitely in the second half. And also, I think the second half, there is a lower base. So I think there will be a progressive improvement as far as the sector is concerned.
Okay, Saugata, good morning. But could you give us some numbers, the kind of volume growth that you'll see in Q2?
You look at it this way, I think it's still 30 days to go and it's very difficult to talk about it. I think what I can assure you is that we believe that it will be in the positive territory as things stand now.
And what about margin specifics? Will they be stable as you're aiming for 18 to 19% this year? Your thoughts on how margins have panned out so far?
So I think let us not get into specifically to a quarter, but what we believe that that 18 to 19% margin over the full year, I think, is very much possible if the current trends are continue. Unless there is some other volatility that happens in the second half, I think it should be possible, 18 to 19% margin.
Okay. What have been the price cuts in products like Saffola, and how's that part of your portfolio doing now?
We have taken significant price cuts in Saffola, and I think in line with the edible oil price table. As you know that I think Saffola obviously got impacted because of the absolute price difference and the absolute put down price, which had gone significantly higher. And as we have taken pricing action, we are seeing the volumes recovering.
Okay, and in terms of rural versus urban, how's the rural demand been? Is it still slow? And what's the outlook on urban?
I think we continue to see recovery in the discretionary part and the urban, and including male grooming, serums, or whether in some of the digital brands. I think the consumption story is very much intact. As far as rural is concerned, I think we are. I think we expect to see gradual recovery. Having said that, I think the worst is over a little bit, because as you know that what happens is that as food inflation gets under control at the bottom of pyramid, the downgradation or the both downgrading and downtrading that was happening in FMCG, that instances will keep on reducing. And we believe that therefore that gradual recovery will happen.
Mr. Gupta, just stay with us, sir. I just want to take quick note of the markets, which are, down significantly. We are down 28, 29 points now. So this is a turn for the worse. 17,515 is where the index is at now. And sharp correction. So we've been trading for, not even 30 minutes. But from the high of the day, which was made at about 9:18, and the high was 17,643, we've sold off almost 150 points, 140 points or so. 17,522 is what we have seen on the index so far. So this is quite a turn that we are starting to see. Let's just look at the mid-cap and small-cap part of the market. That's still holding on, although that is also dropped off significantly from the opening highs. I'm looking at the mid-cap and the small-cap. I think experience is similar. It's blinking red and green, but it's off the highs. That much is absolutely for sure. All right, that's a quick detour just to kind of sort of look at the markets. Thanks for waiting, Mr. Gupta. Could you tell us how was the B2C segment panned out for you in the post-pandemic world? What are your plans for growth in digital brands?
We continue to track well on D2C, and since we have currently a bouquet of brands, obviously there are a lot of synergies, and in terms of learning, synergies in terms of cost is available. Also, I believe in this space, the madness that was there in terms of the kind of cash burn and the availability of capital, there is much more sanity here right now. And therefore, I think that will actually help the stronger brands.
Okay, so what are the spaces that you're looking at? I'm asking you from an acquisition standpoint. What can we expect?
I think we continue to look at acquisitions. We believe that we now have a very good working model for a lot of brands who want to scale up with our help. And it has been a reasonably successful model, and it's unique to traditional FMCG companies. And therefore, I believe that we continue to look for acquisitions. Having said that, I think there is enough juice in terms of headroom for growth even in the brands which we currently have.
Okay, are you facing any specific challenges in the food business, or is that doing well?
I think food is continuing to do well. Obviously, last quarter, as you know, there was a very high base of in-home consumption. Our entire portfolio, unlike a lot of companies, was completely based on in-home consumption and immunity. Both had a very high base. We didn't have an out-of-home, we didn't have indulgence. So there was a high base, and there was a little slowing down in the sense that there was a single-digit growth. But we are seeing again back into that momentum, and we are extremely confident of achieving our aspiration of the 850-2,000 crore, which we are gunning for in the next 1 year.
So, I mean, to take that forward, by when do you get to the 20,000 crore rupee top line?
It's the way I look at it is we have to continue to grow in the top quartile. India we are very, very lucky to and privileged that our home country is a very strong invest to grow story. It's not a saturated market in terms of penetration. There's significant headroom for growth in terms of the unbranded to branded story, especially in foods. There are a lot of opportunities in personal care. So, and also we are an emerging market FMCG company. And most of the markets where we are present in, there is significant headroom for growth. So we strive to continue to grow double digits every year in terms of top line. Obviously, there are years where there is high inflation. There are years there is deflation. There could be years like that. And I think, as I said, that the organization is also undergoing a significant diversification journey in terms of the portfolio by whether it's in India, with food and digital and premium personal care, there will be a sizable business in the next 2 years. We also have a very, very stable and a consistent international business, which is profitable. And therefore, I'm pretty optimistic that we will be continuing to deliver top quartile results year after year. And that is the aspiration. And for that, I think, obviously, we have to continue to strive to do that.
Okay, Saugata, thanks a lot for joining us. That's Marico. Before we move on, just want to highlight the market part once again, because the point I made in the morning as well, in a contracting market, I mean, if you have an inside day, which is the likelihood post the expiry day after a big move, which is the highs and lows of previous days are respected. Yesterday's high was 17,695. Today we were going to 17,650 almost and retreated from there. Now yesterday's low was 17,468. So in this decline, the low is 17,512. So sort of has given us an indication of what kind of day we are in for. And if you were to break this range, I think then perhaps a larger move could happen. But otherwise, you'll have to, again, smartly play this range. As easier said than done, but selling the rallies and buying the dips has been the only trade. But let's do one thing. Let's address some of the stocks which are moving. The NSE sort of indices rebalance, and on the Nifty, it was, I think, perhaps the one change which was waiting to happen for so long. Adani Enterprises making its way into the Nifty and Shree Cement moving out. Mangalam has more, of course. Mangalam.
That's correct. So it was absolutely in line with what the analysts were expecting and what the stock price was telling as well. So now the changes are, announced formally. So the Nifty will include Adani Enterprises with effect from September 30th, and making way for that would be Shree Cements, which would be excluded. The changes, I say, are in line with street expectations, primarily because of the way these stocks moved as well. If you just take a look at it this year, Adani Enterprises has rallied almost 90%, whereas Shree Cement has fallen about 21% odd. So by virtue of that, Adani Enterprises was eligible to be included in the Nifty. But more importantly, come September 29th, when the flows will take place to effect these changes, the street believes there could be almost $300 million worth inflow into Adani Enterprises and nearly $100 million worth outflow from Shree Cement itself. A couple of asides, Adani Enterprises, while it will be the second Adani stock to be on the index after Adani Ports, it'll be interesting to see what remains in the cement pack on the Nifty once Shree Cement goes, apart from Ultratech and by virtue of its indirect holding, Grasim as well.
All right, Mangalam, thanks very much for that. So we'll keep an eye. The market for now is down about 7 points. It's off the highs, but it's not cracking or anything. 17,540 flat. We'll take a break here. We get chatting with Ashok Kajaria of Kajaria Ceramics to discuss their business outlook going forward. Later, we'll also connect with Vinod Agarwal of Eicher Motors to discuss the August sales numbers and the way forward for the company. Stay tuned.